HIMS is a telehealth company that has been absolutely crushing it recently. It has been consistently beating estimates and grown its business at insane rates. However, the stock has been extremely volatile over the past couple of months, growing 150% in a month, then dropping 63% afterwards, wiping out all the gains, and then going back up to all-time highs. And now with the recent news of Novo and HIMS partnership ending messily, the stock has fallen yet again by 33%. Now HIMS is a company I've been invested in for months, and with it rising so much recently, it has become almost the largest position in my portfolio. So let's take a look at their most recent quarter to see what the fair value of this stock is, and if it offers significant value in the market at the moment. And I will also have a look at this recent beef they've been having with Novo Nordisk to see if it offers a major risk to HIMS and their business. Before getting into the numbers though, some of you might be asking, well Leon, what is HIMS? Well, HIMS is a telehealth company, which basically means it delivers healthcare services online without the need for in-person visits. So think of it like seeing your doctor, but all from the convenience of your phone or your computer. On their app, they focus on everyday problems, which are often sensitive, such as hair loss, sexual health, mental health, weight loss, and many more. So essentially what they're trying to do is make healthcare more easier, convenient, and more accessible for everybody. Now this is a great idea overall. When you take into account the younger generation like me, who's always on their phone or computer or whatever, you can really start to see the potential of this industry. Touching on the market conditions surrounding HIMS, and to give a bit of context on the company recently, HIMS has been pretty volatile over the last couple of months. Now one reason for this was obviously due to the overall decline in market sentiment, but another one was for the fact that semaglutide, which was a GLP-1 drug produced by HIMS, has been taken off the FDA's shortage list, which was what allowed HIMS to produce it. Now this meant that HIMS would have to stop producing semaglutide for the most part, and I say the most part because they can still produce personalised products, but this isn't where the bulk of their sales came from. Now this was obviously particularly worrying for investors, because as we can see from the chart here that I found in Q1 2025, that since Q2 2024, HIMS saw their revenue per subscriber go up substantially, and Q2 2024 was when semaglutide was first sold on the platform, so investors were worried that this would slow down growth. Now a couple of months on from the FDA removing semaglutide from their shortage list, we can see that HIMS has been very proactive with its dealing with the situation, which I will explore in the video. So moving on to the fundamentals for Q1 2025, we can see here that HIMS has increased its revenue to $586 million for the quarter, which represents a 21.8% increase quarter over quarter. Now taking a look at their guidance for 2025, they are expecting $2.3 billion in revenue compared to $1.5 billion for the year 2024, and this represents a massive growth of 53% year on year. Operating cash flow is the metric I'm going to be using to value HIMS because I believe it best shows the growth of the core business, especially since the capex for HIMS came in at 30% of operating cash flow, whereas 5 to 10% is more typical for a telehealth company. And 10 to 15% has actually been more common in the previous quarters of the company, so to take out this expense as it is likely temporary to increase scaling, I will be using operating cash flow. And that came in at $109 million for the quarter, which is up 26% quarter over quarter. And then for the trailing 12 months, operating cash flow has grown an absolutely insane 272%, which shows how much of an amazing job HIMS has been doing at scaling its business. Free cash flow came in at $50 million for the quarter, compared to $60 million last quarter, which is a drop of 15.8%, although this is due to capex almost doubling quarter over quarter, which is why operating cash flow is so important for our valuation. But year over year, free cash flow is still looking amazing. As we can see here, it's up 321%, and if we look at the trailing 12 months free cash flow, we can see it has been consistently increasing, grown by 356% since last year and 104% since last quarter. Now taking a look into their balance sheet, we can see that straight away it does look extremely healthy, with them having a current ratio of 1.6, and we can see that they can almost pay off all their current liabilities with just their cash position. Now moving down a little further, one major thing which stands out in their income statement is this massive spending for marketing, which is 39% of the company's total revenue, and is consistently high every quarter. Now the reason HIMS spends so much money on marketing is simple. HIMS is still in its very early stages of its business, and it is far from mature. So they are trying to spend as much money as possible to promote and scale its platform, and marketing is the perfect way to do that, especially for an online company like HIMS. Here we can see that their marketing is clearly paying off, with the money they put towards marketing being recouped within one single year, which allows them to be so aggressive with their marketing expense. This is a great way for HIMS to grow its business, but is also an interesting thing for investors to look at as well. Because as the business grows, this marketing expense is becoming a smaller and smaller percentage of HIMS' revenue. And when the business begins to mature, this marketing expense won't be nearly as much as it is now, and therefore that money will go straight to improving the fundamentals of the business. So if HIMS is looking attractive with its current cash flows and its projected growth, that may be improved by the addition of extra cash that would have been spent on marketing being directly added to the cash flows of the business. Now we do want to look at the future for HIMS because there are many things that they've been working on lately which shows just how competent the management are by being extremely proactive time and time again. The first thing is that although HIMS did have to stop selling compounded semaglutide at the end of Q1, they have also just announced that at the end of March they've released liraglutide, which is another GLP-1 very similar to semaglutide that they can produce as much as they want without the worry of it being removed, which is the perfect time because it allows old customers on semaglutide to switch to liraglutide, and it means HIMS might not lose as much customers as previously expected, which is something investors initially worried about a lot. Pause the video if you'd like to read all this, but near the end you can see here that they say they've seen early signs of success with liraglutide, so it is likely that this will mitigate the headwind of losing semaglutide. HIMS is also looking to expand globally, with them recently announcing that they will be acquiring the company Zava in 2026, which will mark their first expansion abroad into markets such as Germany, Ireland, France and the UK. Now the biggest piece of news that came out for HIMS came out when I was actually editing the video, and it is the fact that HIMS and Novo Nordisk's partnership has fallen through, with Novo Nordisk ending the partnership due to HIMS allegedly engaging in deceptive marketing. Now they also accused HIMS of shifting a lot of their customers to personalised products so that they could continue to sell them products that they couldn't sell otherwise, instead of using Wegovy, which is offered on the HIMS platform and is sold by Novo, which is what they previously agreed to. Now HIMS of course denies this, and as we can see here, the CEO Andrew Dudrum argued back by saying that Novo was trying to strong-arm HIMS by pressuring them to steer patients to Wegovy regardless of what is clinically best for the patient. Now this has obviously panicked investors with the stock dropping 33%, but I believe this is a major overreaction, and with liraglutide coming out on the HIMS platform, they can compound this as much as they like. And this partnership falling through doesn't stop customers from having access to weight loss drugs, even if they aren't eligible for personalised prescriptions. And it is for this reason that I believe that this drop offers a major chance for investors to acquire HIMS at a cheaper price, while the business continued to do just as good as it has been before, with or without the Novo deal. Now briefly looking at HIMS and their competition, before we do our valuation we can see here that HIMS has been flying compared to its competitors and has been stealing massive amounts of market share from its competitors since it was founded, and it nearly has 50% of the entire telehealth market now. Now this suggests that HIMS has a strong competitive advantage against its competitors, and if they can maintain this competitive advantage, it may lead to HIMS establishing a strong moat in the industry. So for people that don't know what a strong moat is, in simple terms think of HIMS like a castle and all the other businesses trying to attack that castle. If they have a strong moat and nobody can get at their castle, HIMS can continue to build up its castle and go on with business, while all the other businesses try to attack their castle will be left trying and failing to attack the HIMS castle, and therefore never able to catch up with HIMS. Here's another figure which suggests that HIMS has a competitive advantage. Just look at how much cheaper they offer their GLP-1 weight loss subscription compared to their competitors. It's half the price of what its biggest competitor Oro offers. We will be using Stock & Lock's DCF calculator, and if you would like to use the tools we use to perform our analysis, go down to the description where you can receive 10% off your first year. Now I will be using operating cash flow for a metric for valuing HIMS, because as I mentioned earlier, they are going through a high capex period at the moment. Now I will be using a 25% metric growth rate for HIMS, which I believe is achievable and is actually maybe a little bit conservative. But since it is a 5-year DCF, I will put it to 25 to leave room for an extra margin of safety. Now I will be lowering their diluted shares outstanding to 5%. Now, although this is still high, it's well below the 5-year average of 57%. Now, I will be using a price ratio of 35. Although this is well below the 5-year average, and it is below what the stock is trading at currently, I do believe it's more realistic because as the business slows down and it does begin to mature, the price ratios will also decrease, and I think it's only logical that this will happen. So I think it's just more realistic to have a price ratio of 35. And even if you think maybe it's a bit low, I think it's better to be conservative to have a higher margin of safety. So all this gives us a fair value of $70, which could yield investors 14% year on year if they can maintain this level of growth. However, I do believe that HIMS could outpace my expectations for its growth, although I do like to stay conservative in my videos, especially in my valuations, because in my opinion it gives me a higher margin of safety and it gives me more conviction over my investments. So overall, I believe HIMS is an amazing company with an even greater future, and it's for this reason that HIMS is the biggest position in my portfolio. However, since the recent 120% jump, I haven't been adding HIMS to my portfolio because it's just been dominating my portfolio since the jump. So I have been trying to diversify into other positions I have in my portfolio. However, this doesn't mean I don't think HIMS is a good investment. Although HIMS is extremely volatile, and I wouldn't be surprised if it's seen another correction, I do believe that looking over the course of 5 years, HIMS is looking extremely attractive in the market today. But that's all for today. I hope you enjoyed the video. It was a bit of a longer one than usual. But if you have any question on HIMS, or if you have any recommendations on what companies we should do next, feel free to leave a comment down below and I'll be sure to get back to it. And if you enjoyed the video, please leave a like and subscribe, as we will be doing a lot more content like this in the future.